It's time to get more insight behind some of the world's leading banks' currency projections with another Targets in Focus. I'm joined once again today by Senior Market Strategist at Crédit Agricole CIB, Adam Myers. Thanks for talking to Dukascopy TV again, Adam. Let's start with the euro-yen. With yet another crunch week in Europe, do you expect European issues to be the main driver of this pair? And where do you see it heading in 1, 3 and 12 months?
Well, no, I don't think that European issues will be the main driver in the week ahead. What we've seen in the last week or two is a repatriation out of Japan back to foreign countries in the MOF data, and that seems to be dominating the euro-yen cross at present. So I think that that factor could remain dominant irrespective of the European issues that come to light this week in terms of the European Leaders Summit. So initially I would expect a move back up through 105, perhaps up towards the 105.75 level, or perhaps even back to the December high at 105.70, before again those flows return early in the new year and take us lower once again, with the yen outperforming back down towards 103 initially and then down to 100 in the middle of 2012.
On to the pound dollar now. The BOE rate decision is this week. Is that likely to have much of an impact on this pair? Is the pound able to escape the woes of Europe at all? And where do you see this pair heading?
I'd say in the short term, yes, the pound is able to escape the short-term worries of Europe. The BOE meeting that you mentioned will not have any impact on the pound this week, as the information is already in the market that the Bank of England remains prepared to deliver additional quantitative easing in Q2 2012. Those factors therefore mean that the pound probably can maintain its semi-safe haven status over the next 3 to 4 months, and perhaps all the way through to summer next year, provided government deficit concerns don't return in any significant form. That being the case, I think what we could see is sterling dollar trade largely sideways in a deteriorating environment, but euro sterling continue to fall, and I would expect euro sterling to be one of the key trades that cable investors look to over the next couple of months, testing down to around 82, 83 by the summer, and possibly marking as low as 84 on its way down during March. So quite a significant fall in euro sterling is expected, again because of the currency's semi-safe haven status.
Finally, on the euro dollar, an article in the FT yesterday suggested that volumes are down in FX trading earlier in the year than expected. Is that impacting this pair at all? And where do you see it heading in the short, mid and long term?
No, well, the only impact that the declining volumes are having is that, of course, they're increasing volatility and widening out bid-ask spreads. So what that means heading into the end of the year is that euro-dollar is likely to be just as volatile, if not more volatile, than it was during November and October. That being the case, I would expect people to park their capital in safe haven currencies like the dollar, and that being the case, euro-dollar should fall around the 132 level by the end of the year.
Thank you very much for joining me, Adam. Stay tuned to Dukascopy TV for more Targets in Focus. Goodbye.